Hello, welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So as expected, we saw volatility during the NFP. After the NFP, we saw a big green candle on the chart of DXY. This is a 4-hour chart of DXY in front of us. And as the NFP was better than expected, we saw a big green candle after hitting the previous support, which is the new resistance of DXY, that is 105.30. We saw market coming down again, and ultimately DXY settled at 104.50. Though DXY tried its best to reclaim their previous support of 105, but ultimately DXY failed. So for the time being, 105.30 is the new resistance for DXY. So on Monday, after the market opening, if DXY tries to go up also, it will face some selling pressure around 105.30. So if DXY really wants to go up, then it needs a big push towards the upside and it will have to reclaim its lost support, that is 105.30. If you look at the daily time frame, then we can see that right now it is trading far below from the 200 moving average, and if we just observe the present structure of DXY, we can clearly see the market is forming lower highs here, and forming lower highs is not a good sign. So yes, the correction on DXY may continue and we may see further upside on the chart of gold. This is a daily chart of US government bonds 10 years, and though the market is an overall uptrend, but if we just try to read the present sentiment, then we can clearly see that US government bond is also under correction right now. As we have discussed in our previous videos, that we have a trend line on a daily chart of US bonds, then yes, there's a possibility that in the coming days it may try to take support and bounce. So now let's head towards the chart of gold. So this is the 4-hour chart of gold USD in front of us, and gold, the last traded price was 1797.04. This is the last traded price here. And if we just focus on the present trend of gold here, then yes, gold market is still very much bullish. There is no doubt. Currency strength meter, sorry, not the Forex sentiment meter, sorry, Forex sentiment meter, then we can see that here is our beloved gold, and 71% retail traders have taken sell position, and you can see the average short price is 1738, and 28% are on the long side. It means they are holding buy position. And as we know that usually market move against the sentiment meter, so there's a high chance that in the coming days also gold will be going higher. So what should be a strategy for Monday then? First of all, let the market open first and try to observe the market. Do not try to take any position at the opening of the market, because usually market remains silent at the opening, but sometimes we get to see crazy volatility also. So you should avoid the market opening. Let the market open first, wait for 4 hours, 8 hours, and just observe the market and see how the market is doing. Because right now you can see that though 1797 is the last traded price here, we do not have any immediate support or resistance. So as a result, after the market opening, watch the market whether market goes up or goes down. Because after all, you must understand one thing very well, that nobody can predict the market. After the market opening, if you see that volatility is less, there is not much movement in the market is slow, in that case you can expect the market to take support around this support zone. This is a support zone in the market right now, that is 1778. Yes, this is a very big support zone right now, 1778 to 1785. This is a very big support zone on the chart of gold right now because of previous price rejection around this level. See, on Friday prices rejected from 1778 level, and this level was also the resistance previously. So previous resistance will now be acting as support, as well as we have seen price being rejected from below on Friday as well. So this is a support zone for us. So on Monday, if you see price starts falling after the market opening, and if the volatility of the market is low, you can definitely expect the market to take support somewhere around here, around 1778, around 1778, around 1779. If you see market bouncing, if you see market taking support and bouncing, then you can take a buy position. Do not trade blindly. If you see market taking support, then only take a buy position. It means if you see market forming a hammer pattern, bullish engulfing pattern, or any good price rejection from below, then only take a buy position at the support. And in case you see market breaking the support and going down, if you see market breaking the support and going down, do not take any sell position immediately, because it can be a trap as well. Because for a proper breakout or breakdown, we need volume. And especially during the first half of Monday, there is not much volume in the market, not much liquidity, market remains slow. So as a result, if you take a sell position at breakdown, let's say if you see market at 1777, you may think that market is going down, but it can be a false breakout as well. So as a result, try to avoid taking any sell position below 1778 level, especially during the Asian session and European session, if the market remains slow. In case you see market going down with a big red candle, then that's a differentiator. Otherwise, try to avoid. Okay, and your next support, okay, your next big support will be around 1759 to 1760 if market breaks this particular level here. Again, we are considering this level here because of Fibonacci, as well as we are also considering the previous minor resistance here. So the previous minor resistance will now act as support here, and we have Fibonacci 23. Let me show you. So this is the Fibonacci, and here is our Fibonacci 23.6% retracement level. So if you combine both the factors here, 1759, 1760 is a good support for the market for Monday. But if the market remains slow, market remains stagnant, then you can expect the market to take support around 1778 as well. So volatility will play a big role, okay, so that you can decide accordingly. And on the other hand, if you see market going up, okay, now listen to me carefully. If you see market going up after the market opening, observe the market around 1804 level. 1804 level. Day traders during the Asian session, European session, if the market again remains slow and dull, observe the market around this level. Taking a sell position in this market condition can be a high risk. Okay, so if you have the required amount of experience, okay, then you can consider taking a sell position if you see some price rejection from above. But keep in mind, do not expect a complete trend reversal. Okay, you can expect a profit of 20 pips, 30 pips max to max. Okay, and to be on a safer side, okay, try to exit within 30 to 40 pips only. Okay, that will be a safer thing to do. And in case market shows a breakout, then what you can do is you can wait for 1805 level. If you see market breaking the level of 1804, okay, if you see market breaking the level of 1804, then observe the market how the breakout has come. Okay, if you see that the market is going for a breakout with a big green candle, then wait for 15 to 30 minutes and just see how the market is doing. If you see the market has the volume, then you can consider taking a buy position. But if you see the market is going for a breakout, but the size of the candles are not very convincing, if the size of the candles are like this chote candle one, in that case, do not go for a buy position. What you can do is you can just wait for the market to come down, wait for the market to retrace, pull back. Okay, when market will come down and you'll see market taking support around 1804, 1805, then you can go for a buy position. See, instead of a breakout, buying at pullback or retracement is much safer. Okay, this is what you can do, because especially on Monday we need to be very careful, especially during the first half, during the Asian session, European session, because there is not much volatility. So during the Asian session, sometimes breakouts can be very, very scary. risky, so please be careful. So this is the chart of gold right now. Hopefully you got the point, okay, where you can trade, where you should avoid. This is my analysis. I can be wrong as well. No trader is 100% accurate. So my dear friends, please do not gamble with your hard-earned money. Please do proper risk management. Calculate the position size, lot size according to your capital and stop loss. Okay, bye bye, take care.